What is up, world? It's your boy Ton, and you are listening to the Wonton Wealth Podcast. Here, I'm going to unravel anything and everything commercial real estate related. And more importantly, we're going to add abundant value. So if you're ready, buckle up your eardrums. Did you know that the government has programs out there that gave out loans? As you can imagine, there's a fuck ton of red tape with them. I mean, it's the government. What else are you going to expect? But today, we're going to talk about two of the most common government loans in commercial real estate. The first one is called CMBS loans, which stands for Commercial Mortgage-Backed Security Loans. So what exactly are CMBS loans? These loans are secured by commercial properties like office buildings, hotels, or shopping centers. When a lender issues a CMBS loan, they bundle it with other loans of similar types, and then they sell them to investors as securities. It's kind of like making a smoothie with a bunch of different fruits and then selling it in bottles. These securities are then traded on the secondary market. CMBS loans are attractive to investors because they offer a way to invest in real estate without directly owning the property. That means you don't have to worry about leaky roofs, clogged toilets, or any tenant complaints. For borrowers like us, CMBS loans provide access to funds for commercial real estate projects, often at really competitive rates, so at the end of the day, it's a win-win. The income that's generated from the properties that are securing the loans are often used to pay interest and principal to the investors that hold onto the CMBS securities. So the better that the property performs, the happier the investors are going to be. These type of loans are popular because they often come with a competitive 5 to 10 year fixed rate, and they can be blanket loans that include multiple properties. Typically, you're going to see probably somewhere around a 75% LTV and amortizations that are roughly 25 to 30 years. And on top of that, you might see some products that are interest only. It's pretty sweet, right? These loans are usually offered by bigger banks, and they're generally going to be investment banks. But here's the kicker. You're going to need to have a net worth of at least 25% of the entire loan amount and liquidity of at least 5% of the loan amount. So you're going to have a little bit of a cushion there. Good thing to note, they're also usually non-recourse, meaning that if you default, the lender cannot come after your assets. They can only come after the property that's securing the loan. So here's an example. Let's say you're looking at a $10 million property. For a CMBS loan, you need a net worth of at least $2.5 million and liquidity of at least $500,000. Plus, the rates are typically around 200 basis points higher than the 5-year treasury rate. One of the major risks with CMBS loans is that they're very difficult to get out of early. Most CMBS loans have prepayment penalties, and they're pretty wild. Some permit yield maintenance, which is paying a percentage-based fee to exit the loan, while some of the other ones require defeasance, which involves purchasing bonds to repay the loan and provide the lender or investors with a suitable source of income in order to replace it. It's tricky stuff, but manageable if you have the right planning. I do have an episode about defeasance that I've done earlier. I will link that in the show notes for you guys. So now let's switch gears. We're going to talk about the financial superhero for small businesses, which is the Small Business Administration, or SBA. So the SBA gives out loans as well. These loans are a game changer for small businesses because they help them with various needs like buying real estate or buying equipment, refinancing their debt, or getting working capital, or expanding their operations. They're pretty much like the Swiss Army knife of business loans. There's a couple different type of SBA loans. The first one, and probably the most common, is the SBA 7A loan. These can be used for general business needs like working capital and equipment. The interest rate on the 7A loans can vary, and they're pretty much tied to the Wall Street prime rate. Here's a fun fact for you. The owners with more than a 20% stake in the business often will have to provide a guarantee. So if you own a chunk of the business, you got to put some skin in the game. Next up, we have the 504 loans. These are perfect for buying or building real estate or equipment. You're usually going to need a 10% down payment, and the loan is going to be fixed for 25 years. To qualify, owners need to occupy at least 51% of the property. So it's ideal for businesses looking to plant roots and grow. Then we have microloans. These are the smaller loans offered by the SBA. They're usually under $50,000. They're used for day-to-day expenses or buying supplies. Think of them as a boost just for some of the smaller businesses. And then lastly, you have disaster loans. These are the lifeline for businesses that are hit by natural disasters, and the goal of them is to help the businesses recover and rebuild. Just imagine if you had a small business and it gets hit by a hurricane or some shit, and you apply for one of these loans. These loans are here to help you put the pieces back together and get back on track. I do have to mention that getting an SB loan is not a walk in the park. The application process can be tricky, and the demands and the time and the effort that goes into these things are pretty wild. It's like preparing for a marathon. There's going to be lots of prep, but it's worth it in the end. Before you dive in, you got to make sure you understand all the details, including the interest rates, the repayment schedules, and all the fees that go along with getting one of these loans. And there you have it. That is all I have for you for CMBS loans and SBA loans, each with their own unique benefits and considerations. Whether you're looking to dive into the commercial real estate or boost your small business, understanding these loans can make a huge difference. And with that, Wonton out. And that's a wrap. If you've made it this far, that means you've listened to the entire episode, so thank you. I hope you enjoyed it, and if you did, please leave a review on Spotify, Apple Podcasts, or wherever you're listening from. And if you've learned something or found it useful, share it with one of your homies. And if you want to get in touch with me, I'm pretty active on IG. My handle is pro_TANH. Reach out, let me know what you liked, what you didn't like, or what you want to hear about in the future. I'm here to tailor this to you. Until next time.